Self-employment activities. Who is the self-employed taxpayer? Who files a Schedule C or CEZ? Business owners who are sole proprietors, LLCs owned by one person that do not elect to be taxed as corporations, husband and wife partnerships. Schedule C or CEZ. File a CEZ only if all the conditions below are met. Expenses that are less than $5,000, cash method of accounting, you have no inventory, no net loss, only one business, no employee, and no business use of home. Completing the Schedule C, you must have a business code. They can be found in the instructions to Schedule C. You must choose an accounting method. Cash method is when income is reported when it's actually or constructively received. Expenses are deducted when paid. Accrual method, income and expenses are reported when all the events necessary to earn the income or owe the expense have occurred and the amount is determinable. You must also have material participation. This occurs when the taxpayer is involved in an activity on a regular, continuous, and substantial basis during the year. You must report all business income on the return. For service-based businesses, income usually is in the form of fees. For inventory-based businesses, report gross receipts. Gross receipts are reduced by the cost of goods sold. Also, 1099 miscellaneous and 1099-Ks are put on the Schedule C. Business expenses. Car and truck expenses. The taxpayer can choose between actual expenses and standard mileage rate. Contract labor, wages and employee benefits, startup costs, depreciation, and business losses are all business expenses. Depreciation is the allowance that is deducted on long-lived assets that a business purchases. The property can be tangible personal property items or can be real property. Land is never depreciable. MARCS is the modified accelerated cost recovery system that's used for depreciating property. Listed property includes items that can be used personally as well as for business. Depreciation can be first claimed when the property is placed in service. Depreciation ends when the property has been fully depreciated or when it is retired from service. Basis of depreciation is either lower of its adjusted basis or the fair market value. A Section 179 deduction is a deduction of the cost of tangible personal property up to $500,000. Bonus depreciation. This is a deduction for 100% of the cost of the tangible MARCS property with a class life of 20 years or less. This only applies to brand new property. Special limits apply to depreciation of vehicles used in business. Recapture. When tangible personal property has been depreciated, is sold at a gain, the amount of depreciation is reported as ordinary income. This applies to any Section 179, bonus depreciation, or MARCS allowance. Home office deduction. If a taxpayer uses a portion of their home to run a business, expenses related to the home are deductible as business expenses. You will use a Form 8829 to figure the home office deduction and enter the amount on Schedule C. To qualify for a home office deduction, which is total of the applicable expenses, the home must be used regularly and exclusively as the principal place of business and a place to meet or deal with clients. A home office deduction is also available if a separate structure is used in connection with the business, or if the space is used on a regular basis to store inventory or product samples. Your direct expenses are those that relate solely to the home office, such as painting your office walls. All direct expenses are deductible. Indirect expenses are those related to the entire home, and only a portion is deductible. To figure this portion, you will need to know the square footage of the office and the square footage of the home. You divide the square footage of the office by the square footage of the home to get your percent, and say you replace the roof. You times the amount by that percent, and you know how much of it was deductible towards your home office deduction. Casualty and theft losses. If a business suffers an unreimbursed casualty or theft, the loss is fully deductible. Any partially reimbursed loss may be deducted to the extent of any reimbursement. A casualty or theft loss that involves inventory can be either deducted as a casualty or theft loss, or deducted by including the amount in inventory loss of the inventory loss in the cost of goods sold expense. Hobby loss limitation. If an activity has an operating loss for the year, the loss is deductible only if the activity is run with a profit motive. If there is no profit motive, then the activity is classed as a hobby, and the hobby loss limitations apply. Losses cannot be more than the income earned for the year. Expenses to the extent of income are deductible only as miscellaneous deductions on your Schedule A's. Expenses from a hobby activity are not deductible for purposes of AMT, Alternative Minimum Tax. Record keeping is very important to small business. A taxpayer in business is required to keep books and records to substantiate income and deductions. The following ways are record keeping: cash register tape, bank deposit slips, receipt books, canceled checks, invoices, and credit card slips. It is our goal as taxpayers to teach our clients to keep these records. They need to keep them 3 years. I always say keep them 5. It's better to be safe than sorry. It's also very important for them to keep track of all income and all expenses coming in and out of the business. They can do this by handwriting it in a ledger using a program like Quicken, where they can print off the end of each month a profit and loss sheet that will tell them how much income and how much expenses and what expenses went out during the month. This will help keep not only the business on track, but when it comes to preparing their taxes, it will make it simpler. This is a Schedule C. Have a wonderful day.